Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing quite strong previous monthly resistance from which all this move to the downside was created, which the market then broke to the upside, and at that point that previous resistance became support here. So the level that the market is currently testing is actually previous monthly resistance turned support, from which we could expect a potential reversal to the upside for the completion of this impulse correction and impulse pattern to the upside. We can also notice that, generally speaking, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 50% and 0.618 Fibonacci retracements lining up exactly with this previous resistance turn support, creating confluence of support inside of this level, inside of which there is a possibility to see institutional longing, further increasing the probabilities of a potential move higher. In fact, what we must notice is that we need to see institutional longing inside of that zone in order for the market to push higher, because if we look left, we can see how this is actually a historical resistance level for this market, which every time held the market below it. So if this market is to break above that zone, it definitely needs institutional longing to push the price above this quite strong resistance level. Dropping down on the weekly time frame, what do we see? Now, from a weekly perspective, the pattern and structure at the moment is quite bullish. In fact, if we look closely, we can see how we have quite strong previous weekly support here from which this move to the upside was created, which at the moment is getting tested again as support and from which we could expect a potential move higher. We can also notice that from a pattern standpoint, we actually have an inverted head and shoulders with the left shoulder here, the head here, and the right shoulder here. So in the creation of an inverted head and shoulders, you would expect the right shoulder to be printed and the market to create a move higher. Now, from a pattern standpoint, an inverted head and shoulders is also, with the last move, an impulse correction, an impulse pattern to the upside. So since we have the impulse and correction, if we want to measure this correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 50% and 0.618 Fibonacci retracements lining up exactly in this zone that we could in fact expect this market to reject to the upside. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market, we can see that even though with the last reports, net positions have been decreased, anyway, we don't see any shorts added with the last report. We actually see shorts getting closed. So this decrease in the net positions is only coming from longs getting closed. This means that overall, it seems like institutions are not really interested in shorting gold, especially because we are inside of that monthly demand and support area, confluence of demand and support that we have identified at the beginning of the video on the monthly time frame. This means that there is the possibility to see that move higher if institutions will once again start moving to the bullish side of gold. Dropping down on the daily time frame, what do we see? Now here on the daily is where we have some problems. In fact, from a daily perspective, this market is still bearish with bearish structures since it has been creating lower lows and lower highs. Until the market will continue creating lower lows and lower highs, we could simply expect more bearish development. So what we must notice here is that the nearest structure is this one here, that is previous daily support turned resistance. Until the market will remain below this resistance, it could easily continue lower. So what we actually need here is a potential break back above this resistance. Only if we get a break above this resistance after the break on the retest of this previous resistance turn support, this is where we have good probabilities of seeing a potential reversal higher away from that zone, and this is where we have good probabilities of seeing more potential institutional longing. So to summarize, until the market will remain below this resistance, it can easily continue lower. However, if we get a break above this resistance on the retest of the previous resistance turn support, this is where we have good probabilities of seeing more potential institutional longing, further increasing the probabilities of a potential move higher. So if we get the break on the retest, how we could be approaching a potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to a bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the mentorship program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if you open an account with them after you join the mentorship program, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and everything goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. Go and check it out at transparentfxtrading.com. The link is also in the description and I will see you in it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.